Welcome back to Trading Hour on CNBC TV 18. And like we promised in our special offering, Quarter Se Quarter Tak, where we bring you key earning expectations from each sector, Nigel today is here to tell us what to expect from the cement sector in Q4 FY25. Nigel, over to you.
Well, in Q4 FY25, cement companies could emerge stronger. Let's quickly run you through what's happening in the industry. First up, cement demand is set to grow by close to around 8%. This after the 6 to around 7% growth that we saw in Q3 and after we had a flattish year in the first half. Demand is now bouncing back across regions. Rural demand is roaring back and the government capex recovery is adding fuel to the fire. On pricing, there's a bounce as well. All regions except South have seen hikes of roughly around 2.5 to 3.5% odd, which has been led by North India, West and Central India. Even April has seen some price hikes, and that's what will give a solid boost to the EBITDA in the coming quarters as well. And after 3 quarters of decline, the EBITDA per ton is set to see some kind of improvement finally. That's thanks to the better pricing that we just spoke about, as well as the operating leverage will play out as well. Though on a year-on-year basis, still that EBITDA per ton will be a little bit lower. Let's focus on company-specific expectations then. UltraTech, well, they gain on volumes from the Kesoram as well as the India Cements integration. Though on the margin, well, that will be capped because they'll be getting the profitability or lack of profitability from both these two acquired assets. JK Cement and Shree Cement, well, they'll benefit from the strong regional pricing, while Ambuja Cement could see a good bounce back after a tough Q3. Before we wrap up, well, let's get you a quick valuation snapshot of the companies. The majors come up for you on the screen, trading between 15 to around 18 times on an EV upon EBITDA basis. That's on the forward earnings, that's FY27. While we also have a few more names, Ramco, Dalmia, as well as JK Cement. So those are the expectations. The big question is, will cement emerge stronger from here on? To answer some of those questions, well, we have with us Mangesh, who joins us. Hi, Mangesh. Appreciate you joining us, this morning. Well, tell us first, what is the read-through you saw from Dalmia's numbers? The positive is that I think prices have moved up a little bit and their operating performance was more or less in line. What's your take? And if we look for any surprise in this quarter, which company could bring that up?
Hi, thanks Nigel for having me. So Dalmia numbers were good, slightly better than what the street expectation was. The EBITDA performance was quite good, and they delivered almost 925 rupees of EBITDA per ton. And this is despite lack of pricing as well as volume growth in the southern region, where they do have a relatively large exposure. So I read that as a quite decent numbers, and I think the rest of the players who have, say, lesser exposure to South, I think they would be able to deliver much better performance compared to what Dalmia did. So volume growth, if you exclude the GPA volumes that they had in the previous quarter, I think it is decent. It's not very high, but I think, the industry, they might have only two of the things. Either they will have volume growth or they'll have pricing. And I'm happy that, the industry is focusing on pricing after a long time. So volume growth probably is in line with what the industry had delivered or slightly lower. But I think over the period of, say, 3 to 4 quarters or period of a year, I think their volume growth would either be in line or slightly higher than what the industry has delivered. So good numbers from Dalmia, and I think, the north and east focused companies should be able to deliver much better performance than.
So the outperformance should basically come in from the likes of Shree Cement and JK Cement. Would that be the call you're making?
Yes. So Shree, I think it would be a large outlier this quarter. We are expecting a bumper quarter from Shree, and I think they will be able to surprise on the positive side. So volume growth for Shree was missing for some time. I think they will deliver on it this time around. And profitability, as always, probably it will be an industry-leading profitability. So we are expecting very close to 1,400 rupees of EBITDA per ton for Shree.
Okay, all right. Valuation's not cheap, but this quarter should deliver a strong showing. What about the south-based player like a Ramco Cement? The stock has gone through a period of consolidation. It's come off the recent peak that we have seen. And the past quarter may not be that great because pricing, as we have been discussing, has been weak. Valuations as well, not cheap, but that deleveraging is something that holds them in good stead. What's your call on Ramco?
So South-based companies and specifically Ramco, they had this double whammy that, overall the pricing as well as demand was weak in the regions that they operate in. And a month back, the state government of Tamil Nadu had imposed a royalty on the increased royalty on the limestone that they mine. So that's also going to increase the cost for some of these southern players, specifically located in Tamil Nadu. But I think April onwards, we have started seeing prices move up in the region. And we have seen 30 to 40 rupees on an average per bag kind of price for all these players. And that should actually improve the realizations for Ramco. But in case of Ramco, I think overall the demand environment in South, because of the state finances, remains weak. And that's why that's something that should actually drive down prices if competition creeps up. They will be able to keep up pricing higher at the moment, but we'll have to wait and see how it pans out going ahead. But for Ramco, I think compared to the valuations, we feel that Dalmia is a much better alternative right now compared to Ramco.
Okay, all right. Mangesh, final question before we let you go. The big boy Ultratech could go through a period of some kind of consolidation on the profitability front as it integrates both the acquired assets, India Cement as well as Kesoram. But give and take everything, give us your top two picks from the large cap cement as well as from mid cap.
Yeah, so based on the valuations as well as the regional pricing outlook as well as demand outlook that we have, I think two large caps that if I have to pick irrespective of valuation, because I see earnings growth, and as well as strengthening profitability for the sector, are Shree and Ambuja, and within the mid caps we like JK Lakshmi.
Okay, all right, Mangesh, we appreciate you joining in. We look forward to being in touch with you as the result season takes shape for the cement players. But as you said, things are looking a little bit more optimistic for the industry on the whole. So let's see how that goes. Well, that's it from Mangesh and myself. Back to y'all.
Well, unfortunately, not looking so optimistic for the FMCG lot. Nestle is now down over 1% and it's moving lower. Volume growth has come in at the lower end of what the analysts were hoping for. I think 2% is the analyst growth. The expectation was 2 to 3%, and Nestle continues to see profit booking. Britannia, too, with that, has taken a tumble, and HOL still down 3.5%, 4%. It's a wrap on Trading Hour with that, but don't go anywhere. On the other side is Halftime Report.